Yo, what's good guys? Welcome to a brand new video. This is episode 4 of the course, which we're gonna speak about smart money traps, aka inducement. Also, don't mind, I don't have my camera on because the lights in my room actually broke down. And it's like 4 a.m. right now, so there's no light at all. But let's just get straight into the video. So we're gonna discuss about smart money traps. What are smart money traps? Is that inducement, right? Meaning early buyers, early sellers. When the demand zone you're targeting, let's say for example, you're targeting this demand zone. This demand zone could be inducement because we have another unmitigated demand as the most extreme one, right? So we're gonna talk about all that. Let's first of all begin with just you're gonna analyze the market, right? Let's say for example I want to analyze the market. Let me go roughly to the 1 hour. In the 1 hour we see that we are on a bearish structure. What could I see? I could potentially see that we have a nice little demand, a supply zone right here. I'm gonna take it roughly because I just want to showcase the use. We have a nice supply zone there, okay? And then for our demand zone, we have a nice little demand zone here. I'm gonna refine it because possibly that low is gonna be liquidity, which I assume. So what do we see? We see that all of these lows are probably gonna be liquidity, aka smart money traps. I'm gonna drop down to this demand and mitigate it, okay? That's what my idea. And then as in the supply zone, I could see that price it takes all of these highs and goes into that supply. Obviously, the lower the time frame, the shorter the time span, but we're just here to showcase, right? So what does price do? It does mitigate here and then it comes over. As expected, it did mitigate all the way down, took out all of that liquidity. It could give a trade, it could not give a trade. It doesn't really matter because you always want to go for the most extreme zones, which actually happen right here. So again, same thing. Let's go a little bit more deeper. What do we see? Okay, I'm gonna take this demand zone right here, just a simple example. All of this is liquidity. That's what I see as liquidity, aka early buyers, early sales, smart money trap, right? Obviously these zones could have potential bounces, but it's not gonna be big, it's not gonna be game-changing bounces. And sometimes if you refine, you could miss entries. That's okay, because we want to take the most extreme zone. Because you have to think about this, the market will always retrace towards the most extreme zone, to the zone that's not getting mitigated, right? If this zone is not mitigated, it will get retraced. So that's 100% certain. For example, this zone hasn't gotten a retracement, hasn't gotten mitigated. It will mitigate this zone. I just know, okay? So we're simply gonna wait and see, because at the end of the day, this is a valid break of structure. But because we have inducement and smart money traps, we know that price eventually gonna hit our supply, right? So we just simple wait. Obviously, you could have taken many trades off these supply zones, but again, I still think that we will go to this supply zone, right? So that's the whole general idea. And obviously, we're gonna come to this demand zone. These bounces, they're just fake, inducement, early buyers, early sales type shit. Well, apparently we're at live market. Okay, so this, this is, I guess we're at live market, but let's go a little bit more in time, okay? I didn't realize we were actually at live market. Or were we? That's crazy. How is that live market? Anyway, so what do we see, right? We see, let's say for example, we have this demand zone right here. I expect that to be a fake bounce, and then for example, as a supply zone, I expect we could potentially mitigate onto here, take out all of these liquidities, aka early buyers, early sales, inducement, right? Same idea. Let's just simply wait. Price does mitigate here, but then obviously it's, it gives a reaction. It could always give a reaction that's very normal, because once to induce, it could again give a trade as well. But at the end of the day, it's gonna come mitigate my zone, and it could always go up or down depending on your zone. Most realistically, you would get a trade or two. For example, price tagged in here, you got like a 70 pip move down. That's easily a trade or two. So again, that's the whole case of it, right? Now what do I expect? Now we can see again liquidity here, liquidity here. We do expect price to pull into this area, potentially even higher. But to keep it simple, you're just gonna add liquidity with the traps, right? So you want to take out early buyers and early sellers, right? Again, simple. We all think that this is all liquidity. Obviously they could have bounces, right? But that's not really important, because we want to have the most extreme zones. Now obviously the lower time frame we go, the easier this will be, as in, it will take less longer for your zones to hit, because now obviously it's taking a little bit longer. Again, what does price do? Perfectly mitigates our demand after taking all these lows, and then has a run of potentially what, like 200 pips, even more potential. And this simply shows that price will always mitigate the most extreme zone. Again, here taking out these lows, coming here. So this just shows it could even potentially go a little bit deeper and then go higher. So this just shows that price will always come back, right? And again, does the same thing, comes to the most extreme, goes higher, and it's gonna happen the same thing over and over again, right? So what we have to do is simple. You have to look at market. First of all, you look at the market structure, right? What do I see? I see potentially a lot of these highs, right? Obviously they got swept, but what do I see? All of these lows. Now what could I look at? Potential demand zone that covers these lows. So when people trade based off sell side and buy side liquidity, they don't realize that when you're trading on buy side liquidity, mostly this liquidity is tagged with a supply zone above it, right? And that's what we're looking for. We're looking for zones who were not mitigated by price, but are close to it, or mitigated one below, right? For example, this is unmitigated. You want to make sure that you're taking unmitigated zones, which is the most extreme and it's the most high probability zones, okay? So let's say my unmitigated zone is right here. This one already got mitigated, obviously. What do? I take this as liquidity, I take this zone as liquidity, and this is gonna be zone, right? So I hope this makes sense. Very basic and very efficient video. If it did not make sense, I'll put a link in the description to my other video, which is also inducement. This is just a little bit more updated. So that's it for today. Hope you guys see you next one.